What's good, ladies and gentlemen? So you may have been noticing that I've been uploading some old videos here. For the most part, I'm uploading videos that receive tens of thousands of views, so anywhere from like 30,000 to 80,000 to 100,000 views, and where the like to dislike ratio was literally 98 or 99%, because I think that those videos are probably the ones that, if you've missed them, that you probably would like to watch because they seem to have some value. And I'll also just re-upload a handful of videos that are among my personal favorites that weren't really viewed that much, and this is one of them. Only had a couple thousand views, but the reason I'm uploading this one is for a couple of reasons. Number one, well-known billionaire Eric Sprott in the global gold and silver arena actually referenced this particular video of mine in an interview, and he said, "Hey, watch this video from this fellow John Kim," and he made some very, very salient points about things that are going on in the global stock market. So even though this video is a few years old, and as are the other ones I'm going to re-upload, they're all still really relevant to today. The points that I'm making. So the points have not become outdated. Otherwise, I wouldn't be re-uploading them. And the other thing is I also want you to notice, because I'm going to insert a photo here, and I really have a problem with King World News because there's at least two instances where they have quoted someone else quoting my work, but just stripped any attribution or credit to my name. And I said, hey, if you're going to really quote my work on your website, and this person referenced my work, and I know this because I'll insert a little basically insert documentation of exactly what Eric Sprott said and that how King World News presented it. And they presented Eric Sprott's photo saying this is an event that only happens once every 333 lifetimes. But that quote he took from me, and he actually misquoted me. So because the actual event only happens every 33 million lifetimes, not 333 million lifetimes. So he misplaced the decimal in, or who knows, it might have been King World News that misplaced it. But the point is I contacted King News World repeatedly, at least half a dozen times when I've noticed these things, to say, hey, I don't mind you interviewing other people that reference my work, but don't strip my attribution and make it appear, because King World News put a picture of Eric Sprott above that headline that referenced my work, trying to deceive people like Mr. Sprott said. And I know Mr. Sprott's an upstanding man because you'll see that he actually attributed the work to me. It's King World News that's really, really shady and deceitful. And if it happened once, I said, okay, but this happened another time when I had my consulting business, and I had a client in Hong Kong that was purchasing my research, and then he would reference the research in interviews with King World News that he gave to, and King World News, again, would just attribute this to this guy. I won't even call him a gentleman, because anyone that's a thief is not a gentleman. He's just basically an amoral, unethical person. And of course, this guy was a hedge fund manager. And again, actually, I don't want to slander this guy, because who knows? It might be King World News again that did, just because I found that they did it with Eric Sprott. Maybe this guy did attribute my work to say, hey, I subscribe to research from this guy, John Kim, and this is what he said. And King World may just attribute it to that guy. But I contacted multiple times about both these issues. King World News never replied. And then I noticed it keeps repeating. And those two are 100% definitive, because the reference to the event, it was basically a 7 Sigma event, but the way, instead of, most of the times it's presented as a probability, extremely, extremely low probability, because it's like multiple zeros. So it's like I think it's like 8 or 9 zeros, but I'll reference it in the video you're going to watch. So it's like 0.0000000000254% or something like that. But how I basically reconstructed that very low percentage for people to understand is I related it to how many times that event would be likely to happen in a lifetime. So when I took that probability, in order to convert it into lifetimes, you have to come up with how many years you're using as a standard lifetime. And I use 90 years. Who's going to use 90? I said, even if you live to 90 years, you say the average lifetime is 90 years. This event still would only happen once every 333 million lifetimes. So that's how I 100% know it's mine. They didn't take like the average lifespan in the United States and Canada and Germany. No one says the average lifespan is 90 years. So that's a specific stat that I calculated using numbers that no one is going to use and duplicate. And so I noticed, and I'll put one other example just recently, but this has happened several times. Every time I write King World News, they don't reply. They never reply. And I even admitted, okay, these are two definitive ones. I said, there are other instances that seem to be kind of really shady about your website, because just this past month, I quoted how there's a 40-year cup and handle formation in silver. So it looks like silver is breaking out Japanese yen. And then they quoted some guy saying, oh, look at this multi-decade cup and handle formation in Japanese, in the price of gold in Japanese yen. Or yeah, I think it was the price of gold. It might have been the price of silver, but you'll see because I'll insert it. And so, but the point is that you could pick multiple currencies, and that one maybe could be a coincidence, but when it happens consistently, and it's not like I say it and then an article appears on King World News site like 3 months later, so it could be a coincidence. I say it and then it happens like 3 or 4 days later. So that has consistently happened like a half a dozen times too. So just, if you follow King World News and you come to my blog, you're a regular reader of my blog or my YouTube channel, and you notice that I say something that and then it's printed on King World News, bombard their website, because if there's one thing I can't stand is a thief and a cheat. And this is the first time in 16 years I've ever called anyone out. So this is not something like, oh, I'm looking for people that try to steal my ideas, because like, you don't know. It's like a comic, right? You could have the same ideas, just like someone could have looked, hey, let's see what the Japanese gold and Japanese yen prices are doing over 40 years. Hey, it looks like there's a massive cup and handle bullish formation. So let me write that. That could be a coincidence. But like I said, when stuff like that repeatedly happens, like within very tight time frames, I write it on my blog, and then 4 days later appears on King World's news site, attributed to somebody else, not to me. And then, like I said, we have two definitive cases in which Eric Sprott attributed that work to me. King World stripped it out. I wrote them, say, hey, at least have the honor of just, saying Eric Sprott said that John Kim said this, but they don't reply, and that's why I have such a problem with them. And so this is, again, the first time in 15 years of me blogging, of making videos, I've ever called anyone out, because I wrote them like 7, 8, 9 times just saying, fix this. They weren't angry letters. I said, but hey, you should act in an honorable, ethical manner. Because the one thing I can't stand is how the morality and ethics is disappearing from business. And that's one of the things I want to correct with SK Wealth Academy. Okay, so I'm done with that rant. Stay tuned, because the bulk of this video is going to follow now. Always remember, remain intensely curious. And until next time, so long. Today I'm going to speak about incontrovertible proof that one has to consider banker market manipulation in your investment strategies if you hope to emerge from this massive global market volatility all over the world. Doesn't matter where you are, Europe, China, the Americas. It's happening this year, 2015. Probably will accelerate in 2016 and even become worse. So this is basically going to be a vlog in which I just talk about how simple mathematics shows that it's indisputable that central bankers, commercial bankers are manipulating markets, and why you must take this into account in your strategies. It's quite easy if you understand basically a simple math concept called the bell curve. So I'm going to show you what the bell curve is. Okay, so here is a picture of the bell curve. Okay. This is a drawing of a bell curve for any event over time. So roughly you can see 68.2% is of the events fall within one standard deviation of the mean. If you see this symbol here, that's sigma. Sigma just stands for standard deviation. So we have 68.26% of all events falling within one standard deviation of the mean. And then we have 95.44%, which is the area right here, falling within 2 standard deviations of the mean. And then you have 99.72% of outcomes fall within 3 standard deviations of the mean. So that actually means there's a very minute possibility of only 0.28% of any event falling outside of 3 standard deviations of the mean. So again, sigma is just another word for standard deviation. So if you can think about the fact that there's only a probability of 0.28% of an event falling outside of 3 standard deviations of the mean, when we start getting into 4 sigma, 5 sigma, 6 sigma, 7 sigma events, which means again 5, 6, 7 standard deviations from the mean, the possibility of that happening naturally is almost nil. So we can actually break down the probabilities percentage-wise of certain events happening, like a 5 sigma, 6 sigma, 7 sigma event. So let me show you what these actual numbers are. Here they are. So we actually have the probability of a 5 sigma event, which is an event happening 5 standard deviations away from the mean, is only 0.00005733.03% chance of happening. A 6 sigma event has a 0.000001973% chance of happening, and a 7 sigma event right here has a 0.00000000256% chance of happening. So here's another way to frame a 7 sigma event to put it into perspective. So a 7 sigma event would be something that happens approximately once every 3 billion years. So in terms of lifetimes, what that is, because I know most people can't fathom, 3 billion years is extremely long time span. If you're considering even that the average lifetime is a very, very, very healthy 90 years, 3 billion years would mean that a 7 sigma event should happen once every 33,333,333 lifetimes. So it's not once in a lifetime event, that's a once in a basically 33 million lifetime event. So that would show you the tiny probability that actually would ever occur naturally. But let's look at some of the recent 6 or 7 sigma events that have been happening within the global financial markets all over the world in the past 5 years. So on January 15th of this year, when the euro plunged by 30% against the Swiss franc in just 13 minutes. So that type of move, that daily move of the euro against the Swiss franc, where it plunged 30% in just 13 minutes, was a 16 sigma event. Remember the probability I just gave you of a 7 sigma event happening. So in essence, what's that saying? Since it's a 16 sigma event, is that event, it's impossible for it to happen without central banker manipulation. Again, if we look at the Chinese stock markets, we had here's a photo I'm going to insert so you can look at the Chinese stock market crash. That was a 6 sigma event. And remember, again, even for a 6 or 7 sigma event, that's not a once in a lifetime event. That should happen once every 33 million lifetimes. So again, you can see that the only reason that happened was because the PBOC was ramping up the Chinese stock market. They allowed everyone to borrow a margin, and everyone got crushed because they created basically absolute absurd price distortions in the Chinese stock market. And then the S&P 500 over the past 4 years, that rise has also been a 6 sigma event. So I'm going to insert the photo here again so you can look at it. So remember, again, a 6 sigma event should happen once every 33 million lifetimes, but yet people, the bankers and the politicians and the corporate CEOs try to say, oh no, this 4-year rise of the S&P 500 was natural, and that's happening to sustainable economic growth. But as we saw starting August 20th, obviously that was
those were complete lies, not true, because that's something that should happen. That type of rise, a Six Sigma event, should happen once every 33 million lifetimes. And even with that in every 33 million lifetime event of the S&P 500 rise, we are still beating the S&P 500 in our Crisis Investment Opportunities newsletter from the time of our launch in 2007 to 2015, August 26th, actually as late as I could look at the yields, and we're still outperforming the S&P 500 despite that once in a 33 million lifetime event by more than 27%. So now we can look at even more recent times. So those are just some of the events I covered in the last 5 years, but even in this week of August 24th, we've had again a number of 6 Sigma and 7 Sigma events. For example, the Dow Jones Industrial Average Index had the largest 2-point drop in history, and then the greatest 2-point rise in history. Now, as all of you know, I said that the ramp up for the past 4 years was a 6 Sigma event, once in a 33 million lifetime event. So it's only natural that I would say that largest 2-day drop was natural. That was bound to occur because the growth in the Dow Jones Index wasn't organic, nor was it sustainable. But the 2-day rise was certainly, it was into actually decreasing volume, which shows you, and actually almost like no volume the second day of the rise. So it's showing that that's unnatural. That again was most likely a 6 Sigma event created unnaturally by US bankers. And when you look at the volatility on Monday alone, August 24th, we had 2,588 point intraday volatility. We had a 4,500 point intraday volatility of the Dow futures one day. Now you may think, oh, that's not that high, but if you realize the Dow Jones Index is only about 16,500 points, that's a 27% of the entire Dow Jones Index, the volatility in the futures. That is just ludicrous. And when we look at the whole week, we had more than 7,500 points of volatility in the Dow Jones Index, when the index itself is only roughly 16,500 and some points. So that is just ridiculous volatility. I don't have the stats, if it's been compared to the regular intraday volatility, but since it was the largest volatility in history today, I imagine it's probably beyond a 6 or 7 Sigma event. It's probably more like the Euro crash against the Swiss franc, which was a 16 Sigma event, which means actually there's no possibility of it ever happening without banker manipulation. So that's just, and then in addition to that, we had a 5.3% move higher in the Chinese stock markets within just the last few minutes of trading in one day this past week. Again, that has to be like a 7, 8, 9, 10, 15 Sigma event. Basically impossible without PBOC intervention and market manipulation. And we even had the VIX, which is a metric of volatility in the US stock markets. We had the biggest 2-day rise. And we had, what else? I mean, this is ridiculous. You can keep going on and on. We had a move in crude oil intraday that was confirmed as a 6 Sigma move. So remember, again, these are all moves that are supposed to happen once every 33 million lifetimes, once every 3 billion years. The possibility being 0.000000256%, and these are happening with regularity. So from a scientific, mathematical standpoint, it shows you how manipulated our global markets are today. Finally, let me talk to you about the people that always say that those of us that say gold and silver prices are manipulated downward by central bankers are conspiracy theorists, and we don't know what I'm talking about, because it's so easy to debunk them with science and with math. Because when we look at these 6, 7 Sigma events, I can just look at, I'm just going to give you one example from 2011 to 2015 to current day now. And in April of 2013, there was a 7 Sigma move. So again, a move that's 7 standard deviations away from the mean when we look at the price movements in spot gold over a 5-day rolling period for 10 years. So we're not even just looking for 1 year, we're looking at the mean of 5-day price movements in gold over 10 years from 2003 to 2013. Actually, I think that's 11 years. And when we look at the 15-day, 15% spot drop in spot gold prices that happened 15% in 5 days in April of 2013. That's a 7 sigma move. So let me remind you what the probability of that happening naturally is. And here it is. If you can see the 7 sigma move, the probability of this being natural would be 0.0000000000256%. So another way of stating this is that there was a 99.99999999744% chance of it not occurring, but yet it did occur. Okay, so suppose I presented, let me frame this just with another analogy. Suppose I presented to you a scenario and I said, look, here's a crane and it has a 2-ton steel pallet, and I'm gonna place you an X 50 meters away from that 2-ton steel pallet, and I want you to stand on it. And I'm gonna drop this 2-ton steel pallet, and if you're willing to stand here while I drop this 2-ton steel pallet from the crane 50 meters away, I will give you $100 million. But there is a chance that you will die, because there is, let's say it's a 7 sigma event, just like that movement of gold spot prices of 5 days in 2013. So suppose I say that there's a 99.999999999997444% chance that you will live, and the only scenario in which you will die is if a 5 million km/h gust of wind happens to come by the exact moment we drop the steel pallet. It pushes a 2-ton steel pallet 50 meters over and then falls on your head and crushes you. But you know that the chances of that happening is 7 sigma event, 0.00000000256% chance. Now, if I asked 1 million people, I would say 999,999 people would say yes. You know who would say no? The single person that would say no, I don't want to take the world's easiest opportunity to earn $100 million that was just granted to me would be the technical analyst that says that there was no manipulation in gold and silver markets, because they believe that a 7 sigma event, which would be the possibility that a 5 million km/h gust of wind will come at the exact moment we drop this 2-ton steel pallet, blow it over 50 meters and drop on your head. They believe that the type of price movements we've seen that have been 5, 6, 7 sigma events in gold markets and the gold futures markets that have these type of probabilities, they believe that a 0.00000000256% probability event is natural, and they said there's no manipulation taking place. So that is how ludicrous these people are, and they are really morons that they can't see the facts that are out there that would say it's indisputable evidence that there is central banker manipulation going on in gold markets. Now, a lot of these technical analysts, when they try to debunk or marginalize those of us that say it's obvious there's manipulation, central banker and commercial banker manipulation using HFT algos in the futures markets, spot gold prices when they collapse so quickly at certain times over the past 4 years. They will say, oh, look at these tin foil hat wearers, these morons, and they engage in ad hominem attacks. But the difference is, even though I say these guys are morons, it's not an ad hominem attack in my case, because I'm providing scientific evidence that indisputably proves they're wrong, whereas they just engage in ad hominem attacks and show no evidence to support their point of view. Now, before I complete this video about standard deviations of all these global financial events that have been happening that cannot happen without central banker manipulation, let me just address one last claim that technical analysts say against those that say the falls in gold and silver prices are banker engineered. And don't forget that a lot of the ramp ups can also be engineered by central bankers, because bankers can, and I've also told a lot of my subscription clients to my services that yes, a lot of these ramp ups are also banker engineered, because they want to profit from the downside when they engineer the drops that are 6 or 7 sigma events, and they can also engineer steep rises in price and also benefit not only the downside but the upside too. And a lot of these technical analysts will say people that claim that these a lot of the collapses in gold and silver prices that have happened very suspiciously in a very rapid short period of time are only bitterly complaining because it's sour grapes when they were long gold and long silver and on the wrong side of the trade. Now let me tell you something, because I've already told you how much we've outperformed the S&P 500, how much we've outperformed the Philadelphia Gold and Silver Index, and in 8 years of operation we've actually only had 1 year of bad performance, which was not without its causes, because I explained in great detail why we had that 1 year bad performance on the performance sheet that's available on my website at smartknowledge.com, so you can go check it out. And I also explained why that 1 year bad performance will never be replicated again. Even in light of including that bad year performance, we far outperformed the S&P 500. We've crushed the Philadelphia Gold and Silver Index by over 127%, which tells you that over those 8 years, we've consistently shorted gold and shorted silver into raids, into banker raids when the prices have gone down. So there's no sour grapes. And in our platinum membership this year, again, the Philadelphia Gold and Silver Index up until August 26th, 2015 is down 35.5%, but yet all the gold and silver mining stocks that we own from the beginning of the year up until August 26, 2015, we've yielded positive 31.6% to our platinum members. So obviously this is not sour grapes while we're explaining this manipulation to people. It could just be technical analysts that always say there's no manipulation in gold and silver prices. It could just be that there are people out there with integrity that won't be a shill for the bankers, take the bankers' position that there's no manipulation, and we're just trying to tell people the truth. Okay, so please comment below. Let me know if you now understand the absurdity of 5 sigma, 6 sigma, 7 sigma events happening in the global financial markets with regularity. Even this week this week alone, there's at least 4 or 5 of these events that are supposed to be happening once every 33,333,333 lifetimes, where a lifetime is 90 years. That is just absurd. And also as well, because we have clients from more than 30 different countries of our Smart Knowledge services. If you're someone that's watching this video from a different country, please do comment below. Let us know if you've seen these similar type of 5, 6, 7 sigma events happening in your financial markets, in your global, in your domestic stock markets. And comment below, let us know. I truly hope that you understand why fraud and central banker market manipulation has to be part of an intelligent strategy of what to do with your assets moving forward. So as always, thanks for watching, and remain intensely curious until next time.